Hello guys, welcome back to a new week. Welcome to the month of May. Yeah, that's it. We are into a new week and plenty of possibilities, plenty of opportunities lining up for this week ahead. Interesting enough, we had the non-farm payroll last Friday. That's what I'm going to be talking a little bit about. Plus, I want to talk about what's happening with the Fed as well, because that NFP, it was a disaster in my opinion, okay? The DXY didn't even move up, it did like maybe for 15 minutes and then continued to go down. So that's interesting. What is actually happening? Because the release was good, but the market reaction was pretty poor, and that's what I want to explain a little bit more in depth today. But first, I have a few things to say. First one is subscribe to the channel. We're here literally every single day posting new content and posting good content quality videos. Look at that. We have the whole studio here just for you so you can update yourself into the market. Second is thumbs up on this video. And third, and not least but not last, don't forget to join us on the Telegram, because that's where I will be sending the links for Tuesday, Wednesday and Thursday webinar from 4 to 5 p.m. Right, the link is on the description, okay, for you to join the Telegram, and it's free. We don't charge anything. Now, let's get into it. Well, 177,000 jobs report, jobs added into the economy. What's the real message behind that? Because that wasn't true, okay? That's a fake number. And I'm literally saying to you, it's a fake number. And the reasons I'm going to tell it in a second. I have so many things, I have so many numbers to don't forget that I've noted down everything here. So basically, at first glance, April NFP was kind of good because we had 177,000 jobs added. The expectation was 133,000, and the unemployment stayed stable, like 4.2%. So far, so good, right? Looks good, bit expectation, unemployment is still the same, so no changes, pretty much everything good. Well, but if we look into a deeper context, that's when we try to, when we dig a little bit more, we can find the problem. And the problem is that the transportation and the warehousing jobs, a surge to 29,000 for above the trend for 1 month, okay? And it's not organic labor strength. It's basically driven by the business rushing to bring in products or goods ahead of the opening tariffs that started on this Saturday or Sunday. I can't remember what day, but the automobiles tariffs started on this Saturday or Sunday. So in other words, they pretty much import front loading, artificially boost the job market, the sector, okay? Because 29,000 laborers employed for two sectors, that is the transportation and the warehousing, it's a lot. It's really, really big, The second thing is that the government employed dropped. It continued a broader trend that has been coming. It was dropping last couple months, but basically the federal jobs fell by 9,000 in April, and that adding to a loss of 26,000 federal jobs this year already. Okay, so this suggests that the fiscal tightening in some areas of the administration of the USA government. The past month we revised it downward by 58,000 jobs. Quiet revision like these are critical to the trend, and it's more important than the headline. And that's exactly what I was thinking, right? If we have such a thing like that, where you got 177,000 above expectation, but the majority of those jobs is coming from transportation and warehousing sector. That is, people needed to bring things to inside of the USA to don't pay higher prices. So they was pretty much front loading. I don't know what products, I really don't know. There was pretty much, loading the products ahead of the tariffs. That's a problem, because that will make inflation higher in the coming months. It's stickier in the coming months. Maybe not higher, but stickier in the coming months. And that shows to me that the Fed will hold the rates at this week. And that's exactly what I want to talk in second. At Thursday, I can't remember the time. Let me just check. I think it's 4 a.m. Sorry, 4 a.m. interest rates decision for the Fed. The consensus at 4.5 and the previous is 4.5. Again, no changes, no expectations to change. I think that the Fed, that Jerome Powell actually, will be looking at data dependency, labor market, inflation, and domestical and international discussion into the tariffs, and a little bit more of a forward guidance, very neutral to dovish. That's what I'm expecting. That's what I think it will drive the market this week. Also, just so you guys know, Australian dollar can potentially strengthen a little bit during this week because we had the Trump and China sort of trying to, Trump say, well, that came from Trump, but basically Trump say that he was trying to make it the trade more fair, all right? The tariffs more fair between between USA and China. So that's good for China, reciprocally for Australia and New Zealand. Japanese yen is strengthening ahead of the beginning of this week. So market is sort of buying risk at the moment. Look at Bitcoin. Bitcoin's going up as well. So lots of those things you should be paying attention are critical for the week ahead. Don't forget that we do have Tuesday, Wednesday, and Thursday webinars from 4 to 5 p.m. in Australia time, and it's free to register, free to you to come and watch us, ask me questions, bring your strategy. We can reveal that, anything that you may like, we can do that on that spot. Guys, thank you so much for coming on, watching the video, subscribing and thumbs up. I'm really grateful for everyone that is watching here, and I hope to see you back on tomorrow's video or tomorrow's webinar. Thank you so much. Have a great week ahead, and I'll chat to you soon. Bye bye.